Hi everyone. Welcome to Level Up Dividends channel. Buying a stock when it's considered cheap can be important for several reasons. Potential for higher returns. When a stock is priced lower than its intrinsic value or historical averages, there is a potential for higher returns. If the stock's price eventually rises to reflect its true value, investors who bought it at a cheaper price can benefit from capital appreciation. Favorable risk-reward ratio. Buying a stock at a low price often offers a more favorable risk-reward ratio. The potential downside risk may be reduced since the stock is already trading at a discount. If the investment thesis plays out positively, the potential upside reward can be significant. Margin of safety. Purchasing a stock at a cheap price provides a margin of safety. This means that even if there are adverse market conditions or company-specific challenges, the investor has some cushion against losses due to the lower purchase price. Dividend yield. Cheap stocks may also have attractive dividend yields. Dividends are regular cash payments made by some companies to shareholders. Buying a stock with a high dividend yield at a low price can provide a steady income stream while waiting for the stock's price to appreciate. Contrarian investing. Buying cheap stocks often involves contrarian investing, where an investor goes against the prevailing market sentiment. By identifying undervalued stocks, investors have the opportunity to benefit when the market eventually recognizes the true value of the stock, resulting in price appreciation. In today's video, I present a list of 5 undervalued high-quality dividend stocks to buy for June 2023. Now, let's get into the list. Stock 1, Kotera. Kotera Energy is an independent oil and gas business that develops, explores, and produces oil, natural gas, and natural gas liquids in the U.S. With over 183,000 net acres in the Plays dry gas window in Susquehanna County, Pennsylvania, the company primarily focuses on the Marcellus Shale. Thomas E. Jordan, Chairman, Chief Executive Officer, and President, recently commented, "Kotera delivered strong first-quarter results, driven by solid execution, and is well positioned to meet or exceed 2023 guidance." Jordan also said, "Based on first-quarter results, Kotera will return $420 million to shareholders, which equals 76% of the company's free cash flow. The return will include $152 million from our recently increased base dividend, 20 cents per quarter, 80 cents annum, and $268 million via share buybacks. We reiterate our commitment to return 50% plus of free cash flow to shareholders, with an emphasis on the base dividend and buybacks, in the near term." Kotera maintains a strong financial position with an investment-grade credit rating and approximately $2.5 billion of liquidity. Dividend yield, 3.31%. Dividend safety, 50. Dividend growth, 71% per year in the last 5 years. Dividend growth streak, 31 years. According to analysts, the stock could reach $30, which represents an upside potential of 25%. Notice that 11 analysts recommend to hold the stock and 5 analysts to buy and no one recommends to sell it. I really love this stock. You should consider it closely. Stock 2, AbbVie. AbbVie has continued to concentrate on branded pharmaceuticals since becoming an independent business, a sector with significant entry barriers and great profitability. Major pharmaceutical companies spend billions of dollars each year on research and development to bring new medicines to market. AbbVie made significant investments to increase its therapeutic pipeline in order to lessen its reliance on a single source of sales and revenue. It completed a number of major acquisitions, including a plan in 2019 to pay more than $80 billion to acquire the diverse pharmaceutical giant Allergan. Dividend yield, 4.30%. Dividend safety, 70. Dividend growth, 17% per year in the last 5 years. Dividend growth streak, 99 years. If you look at the stock price, you'll see that it is close to its 52-week low, which offers a quite rare opportunity to buy the stock at a very interesting price. According to analysts, the stock could reach $164, which represents an upside potential of 19%. Notice that 4 analysts recommend to hold the stock and 6 analysts to buy and no one recommends to sell it. Stock 3, Johnson & Johnson. The founding of Johnson & Johnson in the late 1800s led to Robert Johnson starting his apprenticeship as a pharmacist. His brothers fought in the Civil War and experienced firsthand the high fatality rate brought on by illness and infection after surgery. This environment served as the backdrop for the founding of Johnson & Johnson in 1886, when the 3 brothers manufactured the first sterile surgical supplies to be mass-made. The usage of J&J's goods became the norm among physicians in America, and some would argue that this was the beginning of modern medicine. Johnson & Johnson created and acquired numerous new firms throughout the ensuing decades, including those producing baby powder, Band-Aids, Tylenol, and other medical supplies. But it wasn't until 1961 that J&J purchased Janssen, which went on to become one of the biggest pharmaceutical businesses in the world and now accounts for the majority of the company's income. The sale of a wide range of medical equipment and personal healthcare goods around the world accounts for the remaining portion of Johnson & Johnson's revenue. Dividend yield, 3.07%. Dividend safety, 99. Dividend growth, 6% per year in the last 5 years. Dividend growth streak, 107 years. If you go to J&J website, you can simulate any investment you made in the stock at any past period. For example, if you invested $1,000 10 years ago, you would now have $2,500. According to analysts, the stock could reach $179, which represents an upside potential of 16%. Notice that 12 analysts recommend to hold the stock and 5 analysts to buy and no one recommends to sell it. Stock 4, T. Rowe Price Group. Investment management. T. Rowe Price Group is a publicly traded company. The company offers its services to organizations, retirement plans, financial intermediaries, and private individuals. It establishes and oversees mutual funds for fixed income and equities. The company makes investments in global public equities and fixed income markets. With a bottom-up methodology, it uses fundamental and quantitative analyses. The company bases its investment decisions on both internal and external research. Dividend yield, 4.58%. Dividend safety, 80. Dividend growth, 16% per year in the last 5 years. Dividend growth streak, 36 years. The stock is trading at almost its 52-week low. This could be a nice opportunity to grab some shares at an interesting price. Stock 5, Walgreens Boots Alliance. The Walgreens chain was founded when Charles Walgreen purchased the Chicago drugstore where he had previously worked as a pharmacist in 1901. After joining forces with Alliance Boots, the largest pharmacy chain in Europe and a major international beauty organization, the company moved on to open thousands of additional outlets across America and expanded its operations globally in 2014. With minor contributions from its overseas retail pharmacy operations and wholesale medications business, Walgreens makes the majority of its income from retail sales of general items and pharmaceuticals in the United States. The organization is still dedicated to accelerating its digital initiatives in order to increase consumer engagement and reduce costs. It will take time for these initiatives to show progress. However, Walgreens has overcome its share of difficulties over time, enabling it to continue paying dividends since 1932 and to increase its dividend every year since 1976. Dividend yield, 6.40%. Dividend safety, 79. Dividend growth, 5% per year in the last 5 years. Dividend growth streak, 91 years. According to analysts, the stock could reach $40, which represents an upside potential of 33%. This is it. Remember, I am not a financial advisor. Don't forget to make your own due diligence before investing. I hope the list helps add some companies to your watch list and maybe portfolio. Please push the like button if you like the video and subscribe to the channel for similar content. I'll see you next time.